Is this just an extreme, but at the end of it, a technical glitch because we're so close to the rollover of the May contract?
So it is, in some ways, an extreme and technical glitch, but it's also a huge red flag for spec players in the market who forget the fact that we are in a physically constrained commodity market where storage and logistical bottlenecks really can drive prices negative. And I think it'll serve as a little bit of a beacon and a warning, looking at how aggressive and how negative WTI front month traded this morning to what can happen when storage capacity really starts to get filled up. So I do think there is a very important aspect of this that is technical, but there is a fundamental factor at play in terms of how we got here. And we got here through unprecedented demand drops and unprecedented supply increase out of Saudi Arabia. So there was a fundamental component that certainly played into this. But when we look at June at this point, it is still trading $20, not negative. So it is possible to read through and say, the negative $37 that we saw WTI trade at today was a technical impact in the short term.
Because what's the expectation that the fundamentals of the supply-demand overhang are going to improve? Yes, China has reopened. Yes, perhaps by the next contract we might see some reopening in some parts of the world. But do you expect that demand would have picked up significantly? And do you expect that the reduction in output would have, weighed more, particularly if we have an inevitable reduction on the U.S. shale side?
I think the expectation is that demand flatlines between now and the June expiry, which is May 21st. So I don't think there's a huge expectation we see demand explode higher, but I think we start to see it decelerate from just coming off just extremely, extremely aggressively. On the output side, we will start to see the read-through of some shut-ins. I'm seeing estimates that look at 20 to 25% of U.S. production could come off over the next month. That's 3 to 4 million barrels. That's a very significant amount, and that would probably put us in a place where June could be trading in a more equilibrized kind of status and at least provide some stability to the commodity and take some of the extreme volatility out of the daily trading.